Have you ever seen a $1 trillion bailout of the real estate market? Well, it's happening right now. You came here for the truth, so let me unveil that for you. In today's video, we are going to talk about all things real estate. We're going to look at commercial, we'll look at residential. I want to look at this in the United States, in Canada, in China, and so much more. I've got a lot to cover, and I want to begin with what you're seeing here. A $10 billion real estate fund is bleeding cash and running out of options. So you might have seen this. There's the Wall Street Journal. This is talking about the same situation in Financial Times. Starwood's $10 billion property fund taps credit line as investors pull money. Heavy redemption requests come as fears rise over real estate valuations. This is a big problem, not just for smaller companies, not even the medium, it's all the way top to bottom because commercial real estate, particularly retail and office, are the worst offenders. Now, this affects everybody because one domino falls, the next, and the next. This is important to look at because of redemptions. I've seen redemptions and how they work personally. Looking at these companies which they screwed up for whatever reason, investors start to pull their money out. That sort of a bank run in a sense. And the fund, they have this mechanism called shutting the front door, which disables those people from pulling their money out. You might say, no way, they can't do that. They won't do that. It happens all the time. It happens all the time. Okay? And so, of course, people start getting upset. But they open that up at a certain point of time. And what happens? Well, they open the door just a crack every so often. And as much as people can get out, they get out. And then they close the fund. And then it opens again. And they keep doing this basically to wind that fund down. Eventually, of course, the value of it will be pennies on the dollar. This is what happens to any potential asset, any potential fund. That's the problem that we've seen for many, many years. It's not just this one company. The highest share of loans on record have initial maturities in the next 2 years. Looking at it, share of loans maturing over the following 2 years annually since 2008. Anyway, it's a higher number now than we have seen in years. So we know that if interest rates remain high, this is going to be a problem. Where is this? Is this just the US? No, let me tell you what's happening here. This is talking about Toronto. Some US cities are being devastated by downtown doom loops as offices empty out. Here's how Toronto compares. The situation is dire. Absolutely dire. Toronto's downtown foot traffic recovery rate is below the median of the cities measured, but it will likely avoid the fate of cities like St. Louis and San Francisco, which are seeing serious declines. Oh yeah, I'm sure. I'm real sure. What happened here is multi-level, literally. So Toronto has an underground area that I forget how many miles it is underneath. The entire downtown core is basically a city, and there's effectively a mall under the entire downtown. And it's connecting all the office towers all together, connecting the subway, connecting everything down there. And so there was all these shops. But 2020, not only did the big tall towers close down above the city, but below where what they call PATH is, PATH, all of them closed down. Every single one. It was a ghost town. And so those were all the coffee shops and the, clothing stores and all these different things that were there. Nobody was coming in. It was devastating, absolutely devastating. And there has been no recovery. Yes, there are people back to work. It's not the same. It's not the same. The most splendid housing bubbles in Canada. Spring rally fizzles. Prices are 14% down from the peak in February 2022 and below September 2021. New listings rise. Inventory does the second biggest jump on record. So looking at Toronto, minus 15 down from the peak. Now that was crazy. I always like to look at anytime we have these crazy peaks to kind of just cut them off. whether it's in the bottom or the top, because yeah, things can get crazy for a couple months or something, but that is not indicative of what was even happening within that year, right? It's just these blow off tops. And so, keep that in mind. I just think that when prices get so elevated, it's really a sign of really a danger. It's like holding a stick of dynamite. We don't want that. We don't want to have any part of that. But what about China? What's happening there? Well, things are getting serious. The situation is so bad that look at this. China's real estate workers are taking 90% pay cuts, so basically working for nothing and skipping social events to survive the property slump. This tells you how bad things are. China unveils historic rescue for crisis-hit property sector as home prices slump again. There's no recovery here because based on different estimations, there's 20 to 30 million empty properties. At the same time, culturally, they don't want to buy a property that someone has already lived in. So what do? Right? You just keep building you just destroy buildings and then just build them up again. I mean, it doesn't make any sense, right? So there are 20 to 30 million empty properties. How are you going to fill that up anytime soon? And there's probably a lot more, by the way. Those are just the ones that are emitting. And that's how you get around it. China goes on a $1 trillion apartment buying spree. A $1 trillion bailout? Is that what we are seeing here? Well, China's national team is going house hunting. State-owned enterprises and local governments are answering Beijing's call to purchase the country's vast swath of unsold apartments. That should help put a floor on the plunging property prices. Think about this. So the government says, look, you want to do your national duty? You better buy. And so they're doing so. They're doing that, and I'm sure they want to be in the good books, right? So they're doing this. $1 trillion. That's $1 trillion US worth. That's massive. Even, for other countries. On the US, when we look at it, a bailout of $1 trillion, that would make it, even a dent in the United States. Never mind China. Because China, real estate is it's massive. It's massive. And if anybody remembers, do you remember the size of China's property market, at least at that time when I showed you that chart a couple times? Do you remember how big it was? Test. Let's put it in the comments below. How big was China's property market at that peak? Okay, I believe it was Goldman Sachs who had that detail there. And then this. Boomers' property wealth to be lost in fire sales to pay inheritance tax bills. Real estate is so important for many reasons. People use it as an ATM today. People use it because they feel that, this is I'm going to make my home my number one investment and I am going to pull money out from it because that's my bank account. I could use it. Okay. Well, you see what's happening and the destruction of people's wealth potentially. Look at what happened during 2008. People were diligently paying their mortgage. They were doing everything that they thought was right. And then some people started messing around with these mortgage-backed securities and all that, and were ruining innocent people as a result of all of this. They caused a crisis which pushed all the values down and they became underwater. Baby boomer homes will have to be sold off in fire sales as their families are hit by unaffordable inheritance tax bills. Baby boomer will pass 1.2 trillion in inheritance over the next few decades, but a combination of soaring property values and lack of preparation could leave the loved ones in financial peril at the very height of their grief. It depends. So this is US. Depends on where you live. Some places don't have inheritance taxes and so on. But just understand this, that you've got to plan accordingly. Plan properly. Take the initiative now today. Start looking into it. You don't need to just move your money, off to Mars right now today. But take the initiative. Take the action. Whatever you think you should be doing, just investigate, okay? Have a few meetings. Do things that you think are the right thing to do and ask the right questions. Write them down if you need to. Plan, okay, well, next year at this time, I'm going to do it. Maybe I'm not going to do it, that action today, because it's going to cost a little bit too much money, but this is the time I'm going to do it. I'm preparing accordingly for that. Unless you take action, you will not succeed. That is the most important thing. What separates the people who get things done and those who don't are those who take action. If you appreciate this message, hit that thumbs up button. What can you do? Diligently pay your debt. Don't get into bad debt. That's the first thing. You got to do things, sometimes what they call house hacking. And what does that mean? Basically, for some people, they can buy a unit that's like a duplex. Maybe it's 3, 4, 5 units, whatever it is. And they could potentially be living in one. They could be splitting their house in two. They could live in the basement and they rent out the upstairs, whatever it takes. These times we got to do whatever it takes, and people can get by, not only just get by, but do much better as a result. Okay, there are much more detail. I cover them in my books. I have my playlists on the YouTube channel right here for you, and of course I've got the link at the top of the description, which is basically the Finance Friday, and of course I got my Sunday Business, which I'm telling you right now will be very useful to a lot of you. Okay, just check it out. You can try it for a month. If you're not happy, there's no contract. So anyway, link is at the top of that description right there. I appreciate you being here today, and I'll see you tomorrow. Take care.